Hello and good afternoon, or maybe I should say good evening. I can't believe it's just so dark and crazy and cold. It's changed so much in the past couple of weeks, but I guess it is winter. Actually, we've been pretty lucky. I mean, the weather's been really, really nice. But I want to thank you all for tuning in today and spending some time with me today. You are listening to The Financial Chick Show, and I am the Financial Chick. My name is Denise Nostroms, the CEO and owner of Diversified Financial Solutions, which is a full-service, independent financial planning firm located in Medford. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you want to know more about me or my firm, you can always check out my website, financialchickshow.com. I'm also on Facebook and Instagram at Diversified Financial Solutions, so like our pages to get updates and see what is happening. If you've missed a show, you can always listen to the show that's already been aired, and you can go to the media tab and listen to all prior shows on my website. The topics are listed for your convenience. So I know I'm not alone when I say this. I think we're all amazed that it's December already. I'm not really quite sure where this year has went. Pretty quick. Although I'm kind of happy that it is almost over. Although it has been a lot of good things this year, it's been quite challenging as well, the year 2022. So I'm feeling optimistic for 2023. So hopefully it's not going to let me down. But we're definitely in the thick of it now. We went to the Christmas parade, my husband and I, in Patchogue on Saturday night. And it was really great. It was actually unseasonably warm, and the parade is always probably one of the best, I think, in my opinion. But we also brought our little dog, Winnie, there, so she got to check out the parade too, so that was a lot of fun. And like I said, it really starts off the kicks off the season. I mean, we have the Macy's Day Parade after or on Thanksgiving, and of course this is a local parade, and we get to see Santa, and we're ready to rumble. It's all good. So, and actually last night there was a what's called Sip and Shop down in Patchogue. A few of the vendors there, or a few of the storefronts had different sales that are going on, and I think we all should really try to, I know I've talked about this on the show before, shop local. You know, the big corporations will always do well, but these local stores and business owners, you know, they're our community members, and they're the ones that our kids go to school with, and those are the ones that sponsor sports teams and just do a lot of things. And I know a lot of them support my nonprofit, Power of Women Exchanging Resources. So you know, I really try to do that. So I actually did a lot of my shopping at Patch Print and Ship. So I want to give a shout out to my buddy there, James and Ron, and they're always awesome. So I'm excited that I at least started my Christmas shopping, but it's going to be crazy. So it was a busy week, and you know, in life there's always change that takes place. You know, that definitely happened this week. It's not easy being a business owner because there are so many responsibilities beyond the fact that I'm helping all of you, my clients, and people to identify and reach their financial goals. And obviously I can't do this myself. So as my business grew over the years, so did my team. My employees must respect and treat my clients the way I do, and work to make sure that the highest level of care is taken with each one of them. So this week I had to terminate one of my employees that was just not meeting the high standards that I have set for my clients and my business. But I'm very excited to have my new employee starting on Monday. Her name is Laura, and she is very excited to join the team. So you will get to meet her very soon, and we are just really excited to have her. So she's very, very pumped up and ready to jump in there and get things going. So it's good stuff. So let's talk about some some news in the financial world. One thing, I mean, every week, you know, I get emails, I get thousands of emails, it seems like, on different things, and I try to like go through and read and see what's happening. So I got one saying that Fidelity started to give access to crypto trading to their clients and to anybody that works with Fidelity. So I just found this to be interesting. This industry is very, very interesting, I guess you could say, for lack of a better word. This is happening now in light of the fact that many cryptocurrency companies are actually in the process of filing for bankruptcy. So again, we don't know the ultimate I don't want to say demise, that's negative, but where cryptocurrency is going. I mean, right now it's definitely gotten a few black eyes over the past year. It was really all the rage, and now it's kind of in the gutter at this point. But it's just funny that the industry comes out there and does these things, and it might be a little bit after the fact. But we shall see. So we'll keep our pulse on the market there. I guess another thing that kind of has me a little bit, I always try to keep the show positive, but I guess this is something that kind of aggravates me, is that we've already, and I say we, the Biden administration, has already sent $54 billion, and that's with a B, billion dollars to Ukraine. And just this week, the administration was looking to send another $34 billion. So I look to our country and where we're at, and I hear my clients and what they're talking about, and they're saying that gas is very expensive, although it's come down a bit, although diesel hasn't. So my husband, as a truck driver, is still paying close to $6 a gallon for diesel, and I know I've talked about this on the show before, but that trickles down, which now my clients, when they say that their cost of food has gone up, their cost of clothing, and of course we're in the Christmas season right now, everything has gone up, and they're sending more money to the Ukraine. And I just don't see how or why this benefits the United States. So it just it's a big question mark in my mind, and I'm sure it is in yours too. But when I look to different cities where there's homeless people and there's children that are starving and all of the drug issues that are there, I feel that we could probably appropriate that money a lot better to help these things and to empower our country. It comes at a time where, especially being at the airport, it's always an example that I utilize. When you go on a flight, what do they say when they bring the oxygen mask down? That you need to put the oxygen mask on yourself first if you're with a child or the elderly, because you need to be strong to help those people that may not be as strong or not able to help themselves in a situation if something went wrong. And when you look at America right now, we're not in a strong position, although they're saying we are, but there's a lot that's going on right now with our high cost of goods, inflation, possibility of going into a recession, people coming over the border. I mean, there's just a lot of things that are going on. So hopefully they will get a grip on that and appropriate the money, which of course is your money and my money through taxes, and appropriate it properly. So to be continued on that as well. Another thing you might have heard, and I've had a few people calling me about this, but if it's called ESG funds or ESG EFTs, or ETFs, exchange traded funds. So what that stands for is environment, social, and governance. So ESG is this, the feel good, trying to, help the climate and various, environmental type of things and social nuances. The unfortunate thing is that there's a real magnifying glass on these companies right now. And one of the biggest ones is BlackRock, in that, the performance of said funds have been very lackluster, much more lackluster than the overall market has been. So what happens is these ESG, because it was such a big buzzword over the past couple of years, a lot of big pension companies have invested in this, as well as maybe some of you have invested in it. And they're finding that this may be the next shoe to drop, that people are not too happy about what's going on with it, and it really wasn't exactly what they thought it was supposed to be, and helping these various segments, whether it be environment, social, and governance. So I think you're going to hear a lot more about this. So if you have those investments, you may want to speak with me, and we'll see if there's maybe a way to do something a little bit differently or a little bit better. But times are always changing. But you are listening to the Financial Chick Show, and I am Denise Nostroms, the Financial Chick, the company's diversified financial solutions. I help you look for financial solutions when you feel like there are none. Feel free to contact me at 631-758-8691. We are now closing into the commercial break, so stay tuned, and we're going to talk more about just various issues today. So stay tuned.
Minute 30.
Okay, thank you.
$60 seconds.
Okay, thank you.
Seconds.
Alrighty.
Seconds.
Welcome back. This is Denise Nostroms, the Financial Chick. My company is in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I'm here to help you on your financial journey. Over the years, things change, and I'm here to help you navigate all of those changes. So it's the end of the year, so there's a lot of things that need to be taken care of at the end of the year. I met with a client today. We went through her stock portfolio, and we're looking to see if we can get rid of some maybe losers that, some things that haven't done so well this year, and take some stock losses, and maybe even, take some things that have done well, and which is not many things, of course, but she fortunately had a lot of energy or oil and gas type of stocks in her portfolio. So, we're kind of looking to offset some of maybe the gains, take some gain off the table. I mean, one of her funds did, I think, 119%, which is crazy year over year. So we're not going to replicate that, even if oil and gas continues to do well. So selling some of maybe the good stuff, but if you need some tax losses, it's a great time to toil through your portfolio, whether it be mutual funds or stocks, and maybe sell some of those losers so you can take some of those write-offs for your taxes. Charitable contributions, probably another good thing to do right now. And I do this every year. At the end of the year, I take a look at various charities that I have an affinity for, and give money out to various charities. So in the vein of planning next year, well, I guess we'll stay with the current year. So one thing that you want to do, you take a look at your 401k plan. You have a couple of weeks, so maybe you have a paycheck or two. If you want to kind of increase that payment, you may want to go ahead and do that. As far as IRAs and Roth IRAs, if you don't have a 401k and you're using the IRA for your pre-tax money to reduce your income, you want to put those monies in, although you have until April 15th next year, but it's always good to do it. We don't know where the market's going to be. We know we've moved up a little bit, but it's still down from where it had been, so it might be a good time to put that IRA money in there. And I'm a big fan. If you could do that Roth IRA, get that Roth IRA money in there, and that's going to be one of your best savings accounts for the future. And the other thing that you want to do is you want to consider doing those Roth IRA conversions. Again, I know I've spoken about this. I did mine this year. Take those IRA money that you have, convert it to a Roth. It is taxable in the year that you do it. However, you turn that account into an account that you'll never pay tax on. I mean, there's different ramifications, but you can speak to me, come in and see if this would be a strategy that will work for you. I love the fact that in retirement, people have that pot of money that they can utilize. So for example, let's just say you have a pension. That pension is going to be taxable. Your Social Security, also taxable. If you're taking money out of your 401k or your 403b, again, taxable. The Roth IRA, when you're doing tax planning in retirement, that Roth IRA pot of money you can take out without taxes, as long as you meet certain things. You have to have it for 5 years or 59 and a half, whichever later. But the beauty of that is that you can do some tax planning, and we don't know where tax rates are going to be in the future. We know where they are now, so converting is probably a really good idea because tax rates are low. So come in, we can run some numbers for you, see if this is a good strategy for you. But I will tell you, the clients that I work with that are retired and have put a good amount of money into their Roth IRAs are very happy that they did so. And typically what they say is, man, I wish I would have put more in. So don't be the man, I wish I would have put more in person. Come and see me today before you get to retirement, and let's get that started for you. So maybe you don't want to do it now. I know it's crazy time, but jump in quickly with both feet. Next year, I'm going to give you some numbers so you can do some planning. So the Roth IRA and the traditional IRA in 2022, this year, was $6,000, but that contribution is going to be going up to $6,500. That's for the year that you can put in. And the catch-up, so if you're over age 50, you can actually even do a catch-up. So the $6,500 could turn into $7,500 for those over the age of 50. So that's pretty good. As far as the Roth IRA, there are some caveats, of course. It's based on your modified adjusted gross income. So if you are single, then you must be under $153,000. Or if you're married, the number is $228,000. So if you earn less than that, you're ready and able to do a Roth IRA. And just in case, even if you have a 401k at work, you can still do a Roth IRA. So that's important to know. As far as looking at the 401ks, 403bs, 457s, this year, or actually next year, the number is going to go to $22,500. That's going to be, and that's an increase of $2,000. So this year it's $20,500. Next year it's going to be $22,500. And again, that also has a catch-up for those ages 50 and over. And that catch-up is $7,500. So that actually brings the total, if you're over the age of 50, the total to $30,000 in the year 2023. So that's pretty sweet. So for example, let's say you're earning $80,000 and you put $30,000 into your 401k, 457, whatever the case may be, you're only going to pay tax on $50,000. So that's a pretty good benefit and something that you should definitely consider. And take a look at what your situation is and see. That's something we can do in my office. If you come in, we can really lay out all of your plans and see what makes sense. I just met with clients this week, and they told me that they continuously get pretty decent size income tax returns, and that's fantastic. However, that just means that they're actually, which is ironic, but they're putting too much into their pre-tax 401k and 403b plans. So I said to them, do you have an option to do a Roth contribution? And they did in their plan. So we're working on some plans for them for the new year to now reduce the pre-tax and add in that Roth contribution. So now they're doing it through their plan. They make a decent earning. They actually make very good money. So they would exceed the modified adjusted gross income to do a Roth IRA outright, but now they can do that through their place of employment. So come and see me. Let's take a look at your benefit booklets. This could be something that could be a strategy for you, especially if you're getting sizable tax returns. So this is interesting. So about IRAs, that over 1/3 of U.S. households have IRAs. That's a pretty decent number. And over 80% of households with IRAs also have employer-sponsored plans. So what that says to me is that there's a lot of opportunity that I talked about before as far as conversions. So you have your employer-sponsored plan like the 403b, etc. But if you have IRAs, you can do some of these conversions to get into that Roth. And but they said only 13% of households made an IRA contribution. And again, a lot of that reason for that number is the fact that if you have a qualified plan at work, it doesn't make sense to put into a traditional IRA. That's where that Roth IRA comes in. So, one of the other things, we're in the holiday season, and, we know that our children have a lot of things, and especially if they have family, there's a lot of divorces, so there's various family members and then the grandparents and all of that. Think about the opportunity for children in the future to go to college or go to a trade school. Give them the gift of an education. 529 plans are a fabulous gift for children. They really won't think so now. Actually, the parents will feel a little bit better. Let's say a grandparent gives it to the parent for the grandchild. But it's a really big thing, and down the line, it's leaving a legacy for your grandchildren and or children. I mean, either way. And knowing that they can have an education for their future and not have loans that they have to pay back. So that's kind of a win-win-win right across the board. And we could talk a little bit about it too. The New York plan, you also get a state tax deduction. So that's pretty big deal. And that's something that we're always looking for deductions on our taxes and not paying more than we need to. So a lot of stuff to unpack here, but give the office a call if any of these things sparked your interest, and we can get ahead and then go ahead and work with you and see how we can make 2023 a great year. So let's remember to do better and be better, and let you know that you've been listening to the Financial Chick Show. And I want to thank you so much for tuning in today, and I look forward to being with you next Friday. Have a wonderful weekend. Hi everybody, I don't know who's on here. It's been a little bit of a crazy week. I don't know if you've listened to the whole show, but it's been, I'm exhausted. So I'm excited it's Friday, and I'm glad it's the weekend, but I was also glad to be on here for a live. It's been a couple of weeks with the holiday and Thanksgiving and all that kind of stuff. So thank you for your time, and I hope you learned some stuff. Have a good one. Enjoy the weekend, and I'll see you next week.